A lot of people are under the false impression that the most important factor when becoming a profitable day trader is learning to master a certain trading technique or trading pattern. And then if you just learn the technique and apply it to the real market, you'll be able to be a millionaire, right? Well, in reality, there's a million different trading styles, trading techniques, trading patterns that you can learn. But what really separates the boys from the men, the pros from the beginners, is just the psychology side of things and actually learning to think of these bars as a sort of language and being able to interpret it in real time. So today's video, we're just going to focus on what I am thinking about when every bar is presented and how I change those thoughts as new bars print. So right now it's getting towards market open and we obviously have a downtrend structure. But when I see this many bars stacked, I'm not thinking, okay, I'm immediately going to go for shorts or take shorts. I'm really thinking we have one leg down. Traders are hesitant to keep pushing the market lower. And the reason that bars are stacked are just because there's bulls in the market, there's bears in the market, and there's just confusion. So rather than trying to fit a downtrend like this that looks okay, but really doesn't have any confirmation besides these couple touches in the beginning of the day, I like to focus on in capturing every part of the market. Every piece has meaning, and it wouldn't make sense to just focus on it being a downtrend when in reality, what's happening now is just congestion. So I'm waiting for any setup to appear. Nothing is presentable, nothing is good, nothing is good. Now we have a breakout at the top of this range, and we have a nice bearish signal bar. This is a selling area. So even if you just forget about anything that you've been taught in trading and just focus on, okay, if I'm reading the bars as a psychological measure of traders and what they're thinking and what they're acting on in real time, we have this trading range. There's sellers at the top. There's buyers at the bottom. So once we reach these levels and we have a nice bearish signal bar, it makes sense to go short right there. And it ended up working out. And even we have another setup right here. We went down and we have a lower high. So what this bar is telling us is that, okay, we have an initial breakout that failed. So now we touch the EMA. In this bar, bulls in the market tried to push higher. And now they all got rejected by this bearish bar that showed the sellers are still present. We're still expecting to go to the bottom side of this range. This level is still holding. So you can go short at both of these bars. And now we even have another failed second entry long, another bearish bar, lower high, confirming for the second time that here, bulls tried to buy again. What happened? We went up and we failed to go up and the market crashed downward. Obviously, this was a news announcement, but the price action still works just based on what traders are thinking psychologically. So all I'm trying to do is explaining what's going on and how I'm thinking as these bars are being printed. So now we obviously have a massive downtrend. So what I'm thinking is, let me hop in. Let me see if there's any high probability setups to go short. So here we have a break and some congestion, but we're pushing lower and lower and lower. So as opposed to here, we had a break, we went lower, and we just had some hesitation. Look what's happening here. We have a break, we have some hesitation, we have a lower high, we keep going down, we have another lower high, we keep going down, we have another lower high. So even though it doesn't look that steep, now is where, okay, it really looks like a steep downtrend and just corrected a little bit, and now the downtrend is resuming. So let's see if we can get any two-legged pullback or a second entry short at the EMA. We don't get one, but if we adjust our trend, and you're an experienced trader, you might look at this as another lower high with a bearish signal bar. If you look at every single lower high, this one, not a great signal bar. We have another lower high, not a great signal bar. We have another lower high, not a great signal bar. We have another lower high, not a great signal bar. And now we finally have a lower high with a very, very bearish bar. So at this point, if I'm reacting to the market live, I'm thinking, okay, all the shorts aren't being as aggressive at every moment. We're just slowly chopping along. So now that we have a very presentable signal bar, now is where I'm thinking, okay, a lot of shorts are going to pile in right here. And that's why, if we notice, look at the hesitation. After this nice high probability setup bar, that's when we really got a strong move once again in the downward direction. So now we can see we're still in a sort of downtrend, maybe something like this, and we have a short-term correction. So we have one leg up. Now we have a break and a new high. So let's see, we're still trying to only go for shorts. There's no reason to go long. Look at this massive downtrend. Say you were a trader and you are focusing so much on different setups and reversal patterns, for example, and you see this bar, you're like, okay, I learned about reversal patterns. I have a higher low right here. You have to switch your thinking from, okay, I'm going to look for the setups based on certain rules to, okay, I'm going to look for setups based on where the market's likely headed just from common sense, from a common sense standpoint. Your first intuition has to be, okay, what are other traders thinking in the market? So they're not thinking, oh, I'm going to look for a reversal. They're going to think, okay, I'm going to look how to trap people who are trying to go long. So now we're having a similar situation to what we had in the beginning of the day. We just have a strong downtrend, and now we're just having some sideways movement. So let's just draw our short-term trading range again. We don't even need this downtrend because we're just focusing on this trading range at the moment. We have one leg down, followed by a leg up, and this is an area where we are gonna be looking to short the market. So we break out the top. We can't just go blindly short because we have a nice strong leg up. We have to still respect it. So we have a break of it and we have a new high. And what happens? We end up trading lower. So now let's zoom out a bit. We can even potentially have our trading range as something like this. So we reached the highs. We had an uptrend. We had a break and a new high, signaling the uptrend is likely over. Once we push down and we had a lower high, you might want to take this entry. It is a bit risky because it's at the EMA. If we get another lower high, we should take it like this one. So now, once again, we have two failed attempts by the people who are trying to push the market higher get rejected. So all the smart traders are going to be looking at this bar. They're going to think, okay, I'm going to wait for the exact moment where I can trap the most people going long. We had a new high here. We went down. We had one attempt. We went down again, and we had a second attempt. This is where all the people going long are really going to give up if they get failed or if they get rejected for a second time. And it worked out for a nice scalp, and anything else is a bonus. So we had the scalp, but it wasn't enough to keep pushing the market lower because we had this short-term downtrend, we had a break, and we had a new low. So now we're just in the middle of this trading range. So now we fail out the top again. Let's zoom out. Where price is headed. We could even be headed all the way back to the top. Now we have to switch gears. Even though we're in such a bearish day, there's still a chance anything can happen in these markets. There's still a chance we're just in a massive range and could trade all the way back up to the top. So now we have this leg up. We have a break and a new high. Let's see if we can get back into this trading range. Well, not yet, not yet. We have a nice bearish signal bar there. Let's see if we can get a lower high. We push down, and we end up having lower highs, but they're too far away from the EMA. I'm not going to lie, in real time, I actually took this short just because I had a hunch that we were going to push back down. Sometimes trading is more about intuition than following set rules, but even if you look at these rules, it's really just this strong leg up. We have a break, new high. When we had such a strong engulfing bear signal bar, I just thought it was worth it to take a chance. Sometimes it's worth it to take chances like that if you're a more risky trader in strong trending markets like the one we had today. And you would have gotten an incredible runner. So now we have a second entry short right here. Should we take it? There's reasons to avoid it. So we are in this nice downtrend. So once again, if you're so focused on just your trading technique or following a certain pattern, you're going to go short here all day. But in reality, the smart traders are thinking, okay, we had such a strong push down and we have a strong leg up. So I'm going to respect this leg up, and until we have a clear break and a new high of it, I'm not going to go short, because even though we have a second entry short, we have a new low, we went up once, we had one entry short, so one attempt to go short, we went up again, and we had another attempt. This most recent leg up is still very bullish, and we might even push higher, so we want to wait, especially because the close of this bar is above the EMA. So now we have a break and a new high of that, and now we have a trap, perfect bearish signal bar. We're still looking to get a new low of this downtrend, even if we don't draw it that wide, even if we just focus on this most recent leg. We have a trap bar right here. We had a break and a new high of this uptrend. Now the people are really going to be scared if they're still long, and that's why we had an incredible move down after that. So once again, we have to draw our short-term trend. We started a new one. We have a break of it, attempt at a new low, but we didn't get a new low yet. So we're still expecting to reach that low. And if we do close below that low, a lot of people are going to get trapped because they're just buying blindly at these levels. When now, if we look, we are definitely in a massive downtrend, and every attempt by the bulls seems to get thwarted by the downward moves. So once again, we're just thinking from common sense standpoint, we're probably going to keep pushing lower. We have a second entry short right here, but it's too congested. You really should avoid that. So now we're just getting some more congestion. We're at the bottom of the range, no real entries, before we eventually push down. So we have a second entry short right there, new low, first entry short, second entry short, but the signal bar is no good, and we have to even focus on this most recent sort of sideways movement. So we could even trade back up here before going lower. And in terms of a short-term downtrend, we had this leg down, we had a break, new low, nice bullish signal bar. So we want to wait until we have a nice high probability setup. So now we do have another second entry short, but it's too congested. It would have worked out, but it's too congested for my liking. And now finally, we actually respect this most recent trading range. Let's see if we get to these highs. Not yet, not yet. Now we do. So now I'm thinking this is what I'm thinking in my head in real time. So we had a massive downtrend from the start of the day. We're pushing down, pushing down, pushing down, pushing down. We had a trading range, and now we even are having another trading range below the previous trading range. So I'm simply focusing on this. We had a lot of selling pressure at these highs where this horizontal line is. So if we get back there with a good setup, I'm going to go short. What's the setup? We have this short-term uptrend, we have a break of it, and we have a new high. We also, counting from this low, we have one leg up, first entry short, another leg up, second entry short, failure, trap. So all the people who are going long at this bar, thinking they're trapping shorts, who are going to go short at this bar because there's a second entry short, we have a new low, first entry short, second entry short. So all the people going short got trapped by this bullish signal bar. So if the next bar is another bearish bar in the opposite direction, not only are the people who just went long going to get trapped, but the people who went short are going to want to kind of revenge trade and pile in on their shorts because they only got trapped once. They don't have two failed attempts yet, if that makes sense. So in any terms, common sense says you should go short at these levels. Because we also had a clear break and a new high of this short-term uptrend, it makes sense to take that risk. And that's why prices just plummeted after that point. So now we're still only looking for shorts. We don't want to rush anything. So we have this congestion once again. And this honestly looks like another very nice trap to me. We have a congestion. We have a incredibly long or incredibly strong bullish bar. So if the next one is bearish like this, all the people who went long are going to start rethinking their decisions. And that's exactly what happened. So now, after that, we finally had some relief for the bulls. We have a nice, strong leg up. So now, at this point, we're thinking, okay, we have to pause the shorts until we get a new high because we have a break of it. We must get a new high or an attempt at it before piling in on the shorts. So we just have some congestion. We have a lower high here, but it's very congested. And now that we eventually push down and we kind of forgot about this uptrend, we can start thinking, okay, now we can really resume going short once again. So let's draw our congestion. And once again, we kind of have a similar setup to the one we had right here. We had a congestion, a bullish signal bar, bearish pin bar. Downtrend, some congestion, bullish signal bar, even though you should be thinking to go short at the top of these ranges. Nice bearish trap bar. Boom, there we go. And we just went downhill. So once again, let's draw our congestion. It's just all about psychology and real world applications being applied to these bars. So you can't just go straight in a down line. You need a push phase. So push phase down, people need to take their profits and then they can pile in again. It's all about people kind of balancing their fear and their greed. So they're basically waiting for the perfect moment to be greedy and go short. Now this time we have a bearish signal bar, but we have this short-term uptrend. It worked out, but I would prefer to wait. So now is where I see that as a very nice trade. So we have this short-term leg up. We have a break, new high, bearish signal bar once again. We actually didn't get a trigger, so we couldn't have taken that trade. And prices continued on lower. Now at this point, it's almost market close, and that's going to wrap up the video. Hope you guys enjoyed it. Several trades to look back on. I mean, look how many trades I marked. Plenty for the day. All you need is a few. Sometimes you can have more than a few. And let me know if you guys have any questions. Appreciate you guys watching. Thanks.